Well, good afternoon. Today is Tuesday, the 25th of November. I hope everyone is doing well. Obviously did not want to wait until Thursday or Friday of this week with the holiday this week. And I appreciate the patience of everyone. It's been a couple of weeks since we have done one of these update videos. We've had a number of family issues to deal with. Appreciate the prayers of all those that are aware of the health issues that my mom's been facing. And we hopefully have her on a good course of treatment. So appreciate the well wishes on her behalf and appreciate being absent from this call for the last couple of weeks. Let's dive into the numbers. Mortgage News Daily has a 30-year fixed rate conforming loan at 6.25% today. That is down 1/8 of a point roughly from a week ago. 1 week ago we were at 6.38 in that same survey. Again, these are national averages, folks. It's an eighth higher than we were a month ago, though. We were sitting at 6.13 this time last month. Here's what's moving the market, y'all. What's helping interest rates this week, and it's nice to see some improvement this week because we were seeing 2.5, 3 weeks of straight increases in rates almost daily, just as they were trending higher, as it became more and more concerning that the Fed would not be moving at their December 10 meeting to lower rates a quarter. The market was pricing out that possibility in lieu of a number of different reportings out there, number of Fed voting members that had voiced their concerns over any cuts that would happen absent good data. Well, we got some data this morning, and it's not great news for the economy, but it is bolstering the possibility of a cut at the December Fed meeting. ADP showed 13,500 weekly job cuts through November 8th. Y'all, you got to go back several years to find a labor market that weak, and that is a significant increase in the velocity of job losses in that ADP report. That weakness is also aided by some good news on the inflation front. Producer Price Index today came up 0.3% in September. That is as economists were predicting, but if you pull out food and energy and get to the core rate, it was only up 0.1%. Y'all, that is significantly below where economists were expecting. And again, any of the concerns over tariffs creeping into prices reflected mostly in that PPI report. So seeing core inflation much weaker than expected is good news, and the bond market is rallying as a result. So what does that mean for the chances of a Fed cut? Well, the CME FedWatch tool last week, y'all, only had a 50% chance of a cut at the December 10 meeting. We are now back up to an 85% chance of a cut at that meeting. That is how futures are trading in respect to that cut coming up. So it does look like we're going to get one at this December 10 meeting. And folks, if we don't, then we're going to see a pretty significant uptick in rates. If we do, we're going to see them kind of where they are, because remember, the market does not wait for the Fed to actually act. It fully prices in these cuts. So don't wait for the Fed. Remember that after the last 3 Fed cuts, we've seen interest rates higher. In fact, rates are higher still today than they were prior to the last 2 cuts. So keep that in mind as you counsel your buyers about what their strategy should be regarding locking. My strategy is, we saw some improvement, let's grab it, let's solidify those savings, and if we see a dramatic drop, every lender out there, y'all, has got policies to renegotiate that lock and to make sure you're not forced to close above market because you elected to grab an early price. Hope this is helpful for you and for your clients. Hope everyone has a blessed Thanksgiving holiday. Stay safe. Looking forward to next year. One little note about next year, the 2026 conforming loan limit has been raised to $832,750. So you've got about 30 grand more buying power to stay under the conforming limit going into 2026. In any event, hopefully it's going to be good news with regard to rates from here going forward. I'll keep you posted. Be blessed. Talk to you next week.